Joining me now is Tsitsi Hatendi-Matika from Absa Asset Management, Isaah Mhlanga, who's an Executive Chief Economist at Alexander Forbes Investment, and Jacko Maree, who is a Chairperson of Liberty Holdings and the President's Special Investment Envoy. I think I should start with you, Jacko. Special Investment Envoy. What could be done to make sure that we pull in as many people as we can when it comes to investment?
Well, on the investment front, clearly that is something in the longer term that is critical. It's not going to help the short-term recession issues, but certainly in the longer term, if you think about the levers that we've got, private sector investment, whether it's foreign investment or whether it's local investment, is the one real lever that we have to try to get the flywheel of this economy going.
Tsitsi, let me just throw it to you. We did see the business confidence figures not looking great at all. And over time, if we were to look at the GDP equation, income doubled it with the consumer spending and government spending, of course, the exports minus the imports. Consumer spending is really lagging here. What can you say about this one?
So that's quite topical because today we saw retail sales coming out and those were slightly positive, but a bit of a detraction from the numbers we saw last month. So the revised numbers are 1.8 last month and 1.6 for today. So this already gives you an indication that the consumer is constrained, and this comes from higher fuel, higher taxes, VAT, and all the other things that have been happening over the year. High inflation, so it's been a tough time for the consumer, and you can see it in the numbers.
Isaah, I want to bring you in here. Maybe to just supplement this, I was going through the Article 4 from the IMF on South Africa, the International Monetary Fund, that they just published. And if you do look at disposable income for South Africans, close to 71% of it is actually on credit. Who's to say that this is not actually impeding the growth as it is if consumers are contributing a third to the GDP figure?
I think, look, there are a couple of things that contribute to that. Of course, given the economic cycle, the banking sector is not extending as much credit as they used to be in the previous.
But at 5%, this is actually a good figure. Yes,
I mean, if you look in the run up to the financial crisis, credit was in double digits growth. So 5% compared to double digits growth is really nothing. And if you consider how battered the consumer is, considering the high taxes, there's just no room for the consumer to spend, which is really a concern. But as Jacko said, the investment process is going to take some time. It's going to take some time for the economy to pick up. But my concern really is, when I was on a road show in Europe and in London earlier in the year, investors were saying they don't want to kickstart South Africa's economic growth. They merely want to participate in it, which says they are not going to be the ones that will start the investment process, which means it has to be started domestically by domestic investors. And until we see that business confidence domestically picking up, we are unlikely to see that investment coming from domestic investors. So, yes, we have an investment envoy, which Jacko is part of, but before they can convince the local investors to invest in the economy, I find it hard how they would convince the international investors. I
love that you're going on about the roadshow. Jacko, let me bring you back in here. You cannot go on a roadshow when you have policy uncertainty back home. You know, it just has investors sit on the fence. How are you talking? I'm sure many investors are talking to you about the land issue. How do you address this?
Well, I think what we're doing initially in any event is talking to companies and governments that already have some interest or some stake in South Africa. We're not talking to people that know nothing about our country. So fortunately, one of the legacies of our history is that we have thousands of foreign companies that have investments in this country, and many of them are still looking at expansion. You've seen examples of that of late. Mercedes-Benz were doing an expansion, for example. So I think in talking to investors who are already invested in this country and talking to them about capital expenditure expansion, I think that's the low-hanging fruit. Talking to them about the policy issues, clearly everyone would love policy certainty, but we haven't got that for the time being. And I think it is true that people that invest in emerging markets in Brazil, China, Russia, they are used to some degree of policy uncertainty, but unfortunately you probably have a little bit too much of that right now.
I think if I can just add to that,
please.
Let's just zoom in and look historically. what has been the trends in terms of the ability to attract FDI. If we looked in Africa, in North Africa it went to Egypt, in West Africa it goes to Nigeria, in East Africa it's Tanzania, it's Mozambique, it's Zambia, in Southern Africa it's South Africa. What is common amongst those countries? They are all commodity producers. In the run-up to the financial crisis, they managed to amass a lot of FDI inflows because of the commodity boom. We don't have the commodity boom anymore. What is going to be the selling point? I would argue that we don't have our investment plan properly in place because there are no specific sectors which we know of, which government says, look, here are the 4 sectors that we want to invest in.
And as I hear where you're coming from here, because when QE started, Ben Bernanke, there was a lot of easy money, and much of this easy money actually made its way to emerging markets, South Africa, Brazil, China, and India's. And fast forward to where we are right now, when the normalization is happening, all that money is going back. But the countries that you're mentioning don't have a vibrant JSE of sorts. You know, the Kenyas of this world, the Zambias, don't have a JSE, which is accounting for over 40% of the action on the bourses on the continent. And Tsitsi, let me just bring you in here. If you do have a JSE that is not attracting as much foreign capital as it should actually be attracting with all the capital flight and, issues on the emerging market front, isn't this hurting the capital inflows into the country as it is? I want to start with FDI before we go to the gross figure.
Okay, so I think it absolutely is hurting, but we also have an opportunity here, and I think the window might be small, but we've just signed a deal with our African partners, you know, and this is a chance for not only South Africa, but the other African nations to start thinking about how can we maximize on our strengths. And we can export skills. We can actually think about other things other than commodities and physical stuff that we can export into the African nations and figure out what our strengths are. And this is how the Asian tigers made it, you know. And then also latching on to what the gentlemen were talking about, there is a problem in that as much as we might start getting in flows from other countries, Monash University, for instance, is leaving South Africa. Yeah. So that's Australia saying, oh, this is not really working
18
out.
years.
After 18 years. And tertiary education is topical, it's big, and you'd question why would they leave at this point. So we also have to start looking inward, and not only inward within South Africa, but also on the continent.
Can we really export skills? South Africa, we know it has a skills shortage. As long as we have been post-1994, one of the constraints to attract investment is lack of skills. Now, to use that to say we can export skills to the rest of the Africa, I'm not sure how credible that is.
I'm actually taken back. I'm actually taken back.
Here is the point. I think what we need as a country is to say, what are the 4 or 5 things that would really unlock South Africa's economic growth? Take those things and say to investors, this is where we want to invest. This is where we require your money to. This is how you're going to make your money. Take the renewable energy program, for instance, very clear with parameters that are set, the private sector invested.
Isaah, let me just bring Jacko into the conversation again. First of all, if we're to go with the stats, Wits University, UCT, UP, and Stellenbosch are 4 of the top 10 universities on the continent. If you tell me that you cannot export skills, I am taken back, and I don't know what to say to that, because the stats say otherwise. These are global rankings. Isn't that something that we could be capitalizing on in this country right now and be I don't want to say the Zimbabwe, but be an exporter of human capital?
Well, I think if you look around the continent and in fact around the world, you find a lot of very successful and bright South Africans. Perhaps not enough in real quantity, but certainly having been involved with the banking group that operates in 20 countries around the continent for many years, we've got a plethora of people with high skills that are making contributions elsewhere. So I definitely think it is an opportunity. It's also interesting, I think, that a lot of corporates really train their local people well, and plants here belonging to big international groups are often completely competitive with their counterparts in other emerging economies. But if just looking for a bright spot, changing the subject slightly, the fact that we've got the rand has weakened so much, and the fact that the stock exchange has actually come down quite a bit, is obviously a potential positive going forward. I mean, it's definitely going to curb imports, it's going to promote exports, and we're going to see inflows of portfolio capital. So there is at least some bright sparks, some bright lights.
Silver lining.
Yeah.
Now we're talking about portfolio inflows. They go to the JSE. What do companies use that money for? They buy back shares. It doesn't trickle down to the real economy, where we need growth, where we need employment to be generated. If you look, who is attracting that amount of money? It's mostly the large cap companies that are not responsible for the majority of new jobs that are being created. So yes, we can attract portfolio inflows, but that is not, and it has been proven through history in many other countries, it's not the primary source of new growth, it's not the primary source of new employment. We need investment into the real economy. That is where jobs are going to be generated from. And for that to happen, investment has to go into the real economy, not into the stock exchange.
Guys, let's get into the real figures. That was a good preamble, I need to say. And we've done a good job not saying recession a whole lot. I need to commend us. 0.7 down, at least on this quarter. Tsitsi, let me start with you. I think the biggest problem here is the agriculture, 29.2% down. Who's to say that if we address the agriculture, everything else would be sorted? That sounds a bit dumb.
I'm not an agriculture specialist, so I definitely can't delve into solving agriculture on its own. I don't think that's the only thing we need to solve, but it is sticking out like a sore thumb, and we can see that it's an issue. The agricultural specialists are talking about we are going to see an uptick because a lot of it was from the hailstorms that we saw, the drought in the Western Cape, and these things are in the base figures and they've come out. So we would like to think that going forward, that's out of the base and we start seeing an uptick in the sector. But the rest of the numbers are still not great. So no matter where you look, construction, there's no way we can have a booming construction sector when growth is down, and when companies aren't investing, as Isaac was saying.
And you see, the thing that's very baffling is if we're to look at the 1930s recession, basically what the states did to revitalize the economy is pumping the prime. You invest in infrastructure, the railroads, the roads, and that kind of thing to kind of kickstart the economy, because that money actually does trickle down, those revenues. Jacko, you're the man who's doing the investment. Do you get the sense that this needs to be I hate saying copy and paste, but maybe we need to learn lessons from the 1930s depression, not recession, to make sure that we kickstart the economy as it is?
Well, perhaps I can take a step back. What we really have to do in the short term is to try to get business confidence back again. And the question is, what will get business confidence back? And I think it is essentially issues around policy and focusing on growth. We have to get the government, you have to get a social compact going, try to say the only thing that really matters right now is growth. And what policies are we talking about? Are these policies promoting growth or are they hindering growth? And I think that is something that is absolutely fundamental. And the moment I think that the business community senses that everyone is focused on growth, you are going to see a change in confidence and the flywheel will start turning. Of course, and I agree totally, we've said the consumer can't kickstart this economy. Consumer's fairly high leverage. We know that the government itself is in a tight fiscal position. The state-owned enterprises are in a difficult position. So the only source of growth really in the long term is private sector investment, and I agree. It's first local and then foreign, because the foreigners want to follow the local investors.
Isaah, I'm going to put you on the spot here. If you're finance minister at Tlatlanene, come October for the midterm budget, tell me, what would you tell the continent, the country as a whole?
We are in a difficult position. Growth is very weak.
I love how your voice has changed.
I mean, this is to reflect how difficult the environment is. Growth is very weak. Tax revenue collections are also going to underperform, which means we have to administer the medicine that is required to take this patient out of the hospital. So it doesn't help to say, look, we increased VAT, but now we are also talking about cushioning the poor by increasing the number of zero-rated products. Petrol prices are increasing. We're saying, look, let's perhaps cushion the poor. But these are short-term kind of solutions. It's almost a band-aid kind of solutions. The broken bone which is underneath is still broken. So what we need to do is to fix the broken bone. Unfortunately, that is going to be painful for some time. We just need to go through the pain for the greater good over the long term. I
feel for the person who writes the Dear Minister's speech, because you're doing a good job here, Tsitsi, let me bring you back. Let's talk monetary policy, because with what is happening right here, definitely the South Africa Reserve Bank has to react here. I was going through one of the minutes, and they said that a 10% depreciation in nominal trade weighted rand translate to a 0.2% rise in future CPI inflation. Is it time to tighten? And if so, by how many basis points? Jacko, you definitely have to answer this one too.
So as tough as it is for the minister in October, I think it's just as tough for the MPC, because if you really think about it, right now the SARB has done the most they can, you know, and most of the job in terms of growth has to be done by the fiscal policy. So for the SARB, I think they can actually tighten by their words. And they've been using that quite a lot. So their wording is always what directs markets to give them a sense of, we're not going to sleep on the job. We will tighten if we have to. But they also don't have that much room. The consumer is bleeding. Inflation is going up, but it's not going past the 6% band in the near to medium term. So for now, they can still hold.
Well, projections are looking at 5.6 by
Yeah, I think if you look at the SARB's forecast, first quarter and second quarter next year is going to breach 6%, right?
They're looking at 5.9.
But let's
That's why I say near to medium.
That's correct.
Yeah.
I mean, with the recent currency weakness, it's likely to be revised up past the 6%. But I think for the SARB, they have to look at the source of inflation. It's not demand pull inflation. It's really cost push from the currency, from petrol price, and how persistent is that inflation. Of course, you can think about the 20% coefficient pass through. Studies have shown that it's possibly half of that, which means the pass-through effects are not going to be as significant as the SARB perhaps predicts. But of course, given that we are in a technical recession and a 25 basis point hike in interest rate, how much can it dampen in inflation? And what is the cost to growth that it would inflict in the economy? I think this is the dilemma that the SARB is going to find themselves in when they deliberate at the September MPC meeting.
Jacko, you're the governor. Tell me, what would you do here? 50 basis points?
I'm a long-term investment envoy. Luckily, I'm not into these short-term questions because to me, you know, there's a lot of debate at the moment about stimulus packages, and you know that would sort of imply cutting interest rates, and I don't think that stimulus packages will make a significant difference. It'll be like having a little bit of sugar when you're tired. You know, it'll get your energy up briefly, but then you'll probably be further down than you were before. So it really, to me, is much more getting a message out there that the key ministers really understand what it takes to get this economy back on the move if you take a 2 or 3 year view, and let's put in place all those correct building blocks. Let's get some of this uncertainty out of the way. And I think that'll be far more important than, you know, what happens with interest rates.
Guys, parting shots. If you are the president, let me start with you, Tsitsi.
Do not do this one thing at a time. It has to all work together, and it can't have a lag of a few months. I think it needs to be a massive, massive push at the same time.
The problem is people are very impatient, you know. They keep on expecting things done over time. Isaah.
Pick 4 sectors or 4 priorities and say to the country and the world, these are the only 4 priorities that we are going to focus on. The other the other issues that we need to deal with, we would tackle them in the next 5 years.
Sounds like China, though.
Absolutely, that's why China has been so successful. It focuses your energies and your ambition and all the money that you have from investors into making those 4 priorities successful, which sets a base for any other priorities that we have, which are of second order.
Jacko?
I would just say, let's do everything that is pro-growth, and things that are not pro-growth, let's put to one side for the moment. And I do agree that some of the pro-growth initiatives have to be in certain sectors. Let's really push hard where we think we've got a competitive advantage, and let's focus. I agree totally, and get, you know, the corporates behind the president. Let's get Labour behind the president, and you know, let's push ahead as a team.
Lady and the gentleman, many thanks for making time to speak to us. That was Tsitsi Hatendi-Matika from Absa Asset Management, Isaah Mhlanga, Executive Chief Economist at Alexander Forbes Investment, Jacko Maree, who is a Chairperson of Liberty Holdings and the President's Special Envoy. That's Investment Envoy.